Well, I think the thing about silver is that you can add in that it is a major beneficiary of this move away from fossil fuels. I mean, if you just look at the price of other similar
Right.
uh, things like uranium, like lithium, I mean, the prices have just shot up in 2021. Um, this is going to be the year for silver on that basis. And of course, on top of that, you've got monetary demand building as the currencies find that their purchasing power declines. If you look at it in the context of history, I think what you were saying was that Michael Oliver before me was saying that, in the longer term, it's actually
Yes.
been a reasonable year.
Yes.
And I think I would echo that because I would regard it as a period of consolidation. And I don't necessarily recommend people follow charts closely, but
Uh-huh.
it's generally a rule that when you get an extensive consolidation period, the move out of it tends to be a lot stronger as a result. So I think to look at the performance and say, well, that's terribly disappointing, I think is
Hmm.
just sort of being rather selective in
Hmm.
terms of the overall view. The second thing I would say is that markets are well and truly broken. I mean, you pointed out that we've got very high negative yields on US treasuries.
Hmm.
I think that as far as the markets were concerned, until very recently, people were thinking that, okay, inflation is a bit more sticky than we first thought. And the Fed obviously made a bit of a mistake saying it was transient. But, once the logistics thing is sorted out, it'll all return to normal and we'll be back to,
Hmm.
sort of drifting back down towards 2% target and so on. Now, that is completely wrong. It is a Keynesian, a very distorted Keynesian view. And one of the things that's most frustrating for an economist such as me is watching the Keynesian narrative just dominate everything. It's
Yeah.
patently wrong, and it's led to markets being broken in effect. Now, the reason this is so important is I think in the coming months, maybe even the coming weeks, it will become more apparent to the investment community, the Keynesian investment community, that this idea of inflation actually is going to get worse. And the reason it's going to get worse is basically because of all the money creation that's happened over the last 2 years in particular, and since the great financial crisis as well. I mean, if you look at what's happened to M2 money supply, I mean, that's been growing at an enormous rate. I mean, we're looking at annualized rates for nearly 2 years of just under 50%.
Incredible.
That is absolutely incredible. Now, a lot of people have made tentative comparisons between the current situation and the inflationary times of the 1970s. Well, I looked back to see what sort of monetary growth we had in the 1970s. And at the very, very worst, in the middle of the 1970s, money supply grew by 13.4% in one
Oh,
year.
jeez.
Now, so there is absolutely no way that we're going to see an easing of the rise in prices because of the enormous amount of stimulus which has been pushed in, not just by the American government, but by every other major government as well. And in the American case, of course, you've had these stimmy checks which
Yeah.
are put into everybody's bank accounts, and that's had a pretty immediate effect on the demand side without really the production being there to meet it, because half the production has been shut down either because of COVID or because of logistical problems and all the rest of it. So prices, yes, prices have started rising. I think the last CPI figure I saw was it 6.2 or 6.8%?
6.8, I believe. Yes.
Yeah, I mean, but that's irrelevant. I mean, I
Yeah.
really do think that in the coming months, you're going to see this well over 10%
Hmm.
because of these monetary factors which are driving the whole thing. And I think this is the thing that, our Keynesian friends just do not understand. The other thing that's interesting about the 1970s is that when we went into the 1970s, everybody was Keynesian. I mean, they really were. And then, as it sort of transpired that things were going wrong, suddenly you found that there were people like Milton Friedman on the
Right.
television. People were beginning to listen to the monetarists. So
Yeah.
And I suspect we're going to have the same thing happening here. When things don't perform as the Keynesians expect, then I think you'll find that people will turn to other sources of information and question the whole Keynesian narrative and think, well, perhaps there's something behind monetarism, after all. No, I'm not a monetarist because it is not as simple as that. And I think there's plenty of evidence to back that view. But nevertheless, I think the one thing that Milton Friedman said, which is absolutely right, is that the origin of inflation is money. It's as simple as that. I mean, if you're going to double the quantity of money, you're going to halve its purchasing power in very broad terms. And that's really the situation we're in. So I think that, coming back to last year, what we saw was broken markets, a period of consolidation. The bullion banks had a problem insofar as they had these new Basel III regulations, which in America were introduced in the middle of last year. In London, they were introduced from the beginning of this year, in other words, a day or two ago. Because today's actually the first day. It's not a public holiday here, so
right.
Day. We're talking about the net stable funding ratio, which disadvantages banks dealing in derivatives. It disadvantages banks running open positions on their own book. And it disadvantages banks taking very large deposits. So you can see that there's a lot of change going on. And I think that the banks have tried to prepare themselves for this to a degree. And that has involved suppressing the price of gold, silver, any other commodity where they're running a book as much as they possibly can in order to recover their short positions.
Okay.
We've seen this. We saw open interest on COMEX being hit every time it sort of poked up a little bit. They came in and they tried to get it back down again. And fortunately for the bullion banks, you've got I can only call them idiotic hedge funds who just think in terms of a pairs trade, and they don't actually understand that they're just setting themselves up to be ripped off by the bullion banks. But it happens every time.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.